The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the October 17th. You know, this isn't just a terrific Thursday edition. We need to call this the Tom Terrific Thursday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. And my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's really what it's all about. So let's go look at one of our tools. This is the tool I call From Wishes to Desires. You know, to a lot of people, ambition is kind of a mystery. The dictionary says it's an eager desire for distinction, power, or fame. But what does that really mean? You know, the word eager all by itself is kind of exciting. I mean, kids are eager for their birthday parties. Many of you are eager for your next trade. Many are eager for a trading strategy that's got a successful outcome. Many are eager for their next car or a vacation, maybe a walk on the beach. You know, things like that. Eager sounds fun. And so it shall be. So, what should we be eager for? Something to think about. In fact, it is something that you should put down on a piece of paper right now. Right now, just the first thing that pops into your mind. What is that you're eager for? Or even if you say, I don't know what I'm eager for. What could you be eager for right now? There's got to be just one thing that you could be eager for if you had to. How about to just simply live a better life, have a better family, eager to make more money? Remember, you and I, we have the remarkable ability to get exactly what we must in our lives. The key being must. For many of us, we need to change some of the things we are eager for into musts, not coulds or shoulds. You see, this one small change can change your life forever. When you start turning your coulds and shoulds into musts, folks, it'll be a beautiful thing. By changing coulds and shoulds into must, that's how we deal with the backbone of eager, which is the desire to change our disciplines. If we want to be ready for tomorrow, we need to finish preparing for today. If we want a better life tomorrow, it means we need to start working on it today. So the question is, what one thing could you do right now? What one action could you take right now that could turn a could or a should into a must? Are you looking for trading advice or education? If so, commit to investing in yourself. You know, at TFNN, we have 7 individuals each day, Basil, Larry, Tom, Daryl, David, Andy, myself, each offering our hearts and our souls, each wanting to teach you how to fish, each offering an education so that you can go from here to there in less time than it took us. Yes, folks, make an investment in yourself in whatever it is that you must. Remember, that's the key word, that you must do. Not should or could, but must. And when you do, you will make that day count. And you know why? Because tomorrow is counting on it. That's how we go from wishes to desires. Well, let's go check out the wishes in the marketplace here right now. We've got the Dow futures off 101 points, trading out at 15,148. S&P futures down 5.5 at 1707. NASDAQ futures off 5 3/4 points at 3258. Russell 2000 down about 5 points at 1085. King dollar back 67 cents right now, trading out at 79.89. The euro up 125 ticks. A lot of movement in the currency marketplace. The euro, the yen, the pound. Boy, they are moving. How about that hard currency? How about that hard currency? That's why it is terrific. That is why it's Tom Terrific Thursday. Tom making that call yesterday on the air. Before that, in the calling for gold to have made a bottom. Right now, it's trading up $35. So it is Tom Terrific. Congratulations out there. Right now, Goldilocks trading up at $13.17. Silver up 40 cents. That's up about 2%. So a little bit lagging behind gold. And that, quite frankly, is what you did want to see out there because, remember, silver had been stronger than gold, so you wanted to see gold take charge, and taking charge it is. Light sweet crude, that's trading off $1.37 right now, trading out at 100.91. Natural gas back a couple of pennies at 3.74. Looks like that's going to go down and test the channel line that it broke out of. If we take a quick peek around the globe out here, over in Germany right now, the DAX is off 63 points. That's down about 0.7%. The FTSE holding up okay, only off 0.4% right now, down 23 points. The Nikkei last night up 0.8%, up 119 points. The Hang Seng off 0.5%, off 133. It's relatively unchanged in the Shanghai. It was down about 5 points. Our call-in number is 877-927-6648. If you give us a call, we'd be happy to take a look at your stock chart. So, where do we begin? Now, if you're watching us on TigerTV, and I hope that you are, what you are seeing on my screen, you are seeing 4 of the different futures quadrants out here. You're seeing in the upper left, you're seeing the ES Mini, that's the S&P futures. In the upper right, you're seeing the Dow futures. Lower left-hand corner, NASDAQ futures. Super lower right-hand corner, the Russell 2000 futures out here. You know that that's the EKG of the marketplace. It helps us to understand what's out here. Remember, the patterns that I show here on these 30-minute charts, they work in all time frames. And what we can see here, now look, if you're listening on the radio or your mobile device at tfnn.mobi, thank you so much for doing that. Remember, the live stream of the show can be obtained by going to the homepage of tfnn.com. Over on the right-hand side, upper right-hand side, you'll see a box, three little button with 3 little smartphones in it. Click on that. The show will stream live to you. And, of course, the archive can be obtained on Channel 9. Now, if you are taking a look at this chart out here, you'll see a blue diagonal line going from lower left to upper right. And what you can see is that those levels were broken. The last one to break that level happened to be the ES Mini, the S&P futures contract, as we were coming into the 9 o'clock hour. So now what we have seen here is all 4 of these futures contracts have broken their rising channel lines. The one we're going to focus on here first is really the Dow. We're going to focus on the Dow because, it is of the 4, it is the weakest of the 4. Now, when you break a channel line, what often will happen, in fact, what you'd like to see happen, is just like to see price go back and test that and confirm that it's a real breakout. If we take a look at this channel line, we're taking a look at the Dow futures, the 30-minute chart out here. As we come off in the channel line, we're using we're not using the extreme of the trading session, which would be the wicks. We're just using the open or the close, and so, which is really the essence of price out there. And so we're using the low or the open, I should say, at 12 noon on October the 9th for the Dow futures. That level, 14,672. The next 2 touch points are going to be the close and then following open on the 30-minute session out here. That gave us 2 touch points. We can see that the Dow, in essence, broke through that. It did that at 4 o'clock in the morning. So did it at 4 o'clock in the morning. You can see price had moved down, came right back to where we saw a nice breakout inside. Now, that's really important because you know how stocks, Tom has taught us, right? Stocks will come back to a breakout area. Well, you can also take a look at breakout areas from a candle standpoint, not just from a volume standpoint. And if you take a look at that wide-ranging bar here, that was at 10 o'clock yesterday morning. That low of that was 15,177. Take a look at how price came all the way back into that area. The low of it actually was 15,177. The low that we saw that took place at 4:30 this morning was 15,174. Rejected that area, went back up, and in essence tested the bottom of that rising price channel. And what do we see? We have seen a rejection. You could say, hey, Steve, I'm looking at your screen. It didn't touch it exactly. Folks, you got to use a little bit of room here. This needs to be guidelines. So what is this really telling us with regard to the Dow futures? Well, if we take a look at the larger A to B equals CD that could be setting up here right now, we go all the way to our swing point high. That came in at 11:30 yesterday morning, 15,311. There's a couple A to B equals CDs that you could draw. You could draw the small one. That would be a move down to 7 o'clock last night, slight move up, about a 0.382 retracement. That tells you you're going to do more than a 1-to-1. A to B equals CD. So that would be 1A to B equals CD. You can see here, no bullish moves here. So it's got lower price. You can take a look at a larger A to B equals CD. This is the one that is perhaps more likely to unfold as we take a look at it. This one here suggesting that you could see the Dow pull back into about the 15,050 level out there. More than a 1-to-1 A to B equals CD. So I would say the target here, 15,051, maybe 15,000 even Steven out here. But is that really a breakdown? Is that a real problem? No, I don't really think so. I think it's just a retracement and what has been a nice move to the upside here. Now, that's on the Dow futures. If we come and take a look at that was the weak link out here. Let's go take a look at the strong hands. The strong hands being, we'll call it the NASDAQ futures. The NASDAQ futures here breaking through its rising price channel, and it did that break at about 22:30. So what is that, 10, 12? So that's 10:30 in the evening last night. So it breaks through that area, trades sideways on that next bar. What does it do? It tests it at about 23:30. So what is that, 11:30 in the evening, comes back up, tests the bottom of that price channel, and rejects it. So the strong hands also, because these are all similar price channels that were formed in each of the futures contracts, it did what it was supposed to do. It got up and it tested it, and now it has moved lower. In fact, we see a break of the trend line. So the red line that you're watching on my screen here is a trend line. You got the channel line in the blue area. You got the trend line, which is the red line. When trend lines are broken, price will oftentimes go back and test it. What happens? We see a break of that area. We see a little test here. That took place at 2:30 in the morning. We see the real test that took place here at 3:30 a.m. Rejected that area. So the strong hands are also saying, hey, time for a timeout. Time for a bit of a retracement here. The ES Mini, that was the last one to go ahead and give the signal that we should see a market retrace and pull back as that here. Now, does the ES Mini have to go back up and test the same channel lines that everything else has tested and broke? It could. It should. But it doesn't have to. I think we've got enough information from the Dow futures, from the NASDAQ futures, to suggest that we should see a lower market today. A nice retracement, setting up a buy opportunity in the not-too-distant future. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Now, the key area to be watching on that ES Mini is going to be this little hammer candle here that had formed yesterday at 4:30 or this morning, I should say, at 4:30 this morning. So, formed a hammer candle at the bottom of that rising price channel. You know, if you listened to yesterday's show, we were able to tear apart this rising price channel. We saw a hammer candle that took place right back here at 2:30 in the morning. That was on October the 15th. Couple of bullish engulfing candles. So that price channel, very, very important price channel. The bears had defended that area. Again, we've seen a breakthrough of that level. Right now, the B point of an A to B equals CD down happens to be a hammer candle, and that is the low, which is 1708.50. That's what you want to be watching for. If you do see a break of that low, that's what will confirm that we'll see an A to B equals CD down in the S&P, in the ES Mini out here. So the ES Mini a little bit stronger than the other four as we took a look at those rising price channels, but I don't think the ES Mini is going to be strong enough to hold up the rest of the marketplace. So anyways, let's go out to Philly, to Sam. Sam, thanks for calling. Thanks for holding. How are you this morning?
Sure. Good morning, Steve. How you doing?
Excellent. Thanks so much for asking. I don't think I have the right ticker symbol here, so tell me what it is you wanted to look at. It's
J&J, Johnson & Johnson.
Got it. Okay, got it. So Johnson & Johnson trading out right now, or closed, I should say, last night at 91.11. Tell me what you're doing and how I can best be of help to you.
Yeah, I actually purchased it at 87, and I'm thinking about getting out at 97. That's
87.
what my channel tells me.
Okay, all right. So you bought it at 87. It's been on the daily chart here. Johnson & Johnson, as we take a look at it, it had been in a nice uptrend, but that trend seems to have changed here as it was making its highs all the way back on August the 2nd out here. It actually looks like it is forming more of an A to B equals CD down versus the A to B equals CD up. But let's go check out the A to B equals CD up that is potentially out. And the reason actually I don't even see the A to B equals CD up other than maybe the larger one. And so you're in at about 87, and you're looking for, you mentioned the price that you were looking for was about 97. Is that right?
That's correct.
Yeah. So let's take a look at what Johnson & Johnson has done here so far. First, I'm taking a look here at a swing point from September 20th, and that has 14 million shares out there. Now, that's a bearish engulfing candle. I'm going to draw a line across the top of it. And what Johnson & Johnson did yesterday was it broke out above that level, which normally one would say, hey, that's good, that's a breakout. What it did the day before, though, was it created a shooting star candle, and that was on October the 15th. And so really the resistance level now, because it set a new bar, was 91.46. So in order for your trade to work out, that's one of the... Whoops, I didn't mean to do that. Let me just draw a red line across here. Now we're going to take a look at volume. And so let me do this, that. Let me draw it backwards as well. Just going to try to set this up here. Give me a moment here. Sorry about that, Sam.
Sure.
Well, we'll just leave it like that. I could have done that a lot easier. So your resistance on this is right here at the high from 2 days ago at 91.46. Now, as price came into the swing point, which had 14 million shares, it came into it with that shooting star, only 11 million shares, and yesterday also 8 million shares. So it doesn't really have the energy necessarily to break out above this area. If it does, and it gets up to 97, boy, it's going to run into some resistance up at the highs of August 2nd. So what you might get out of this more so as a max would be about the $94 level. If this starts to move down, because it looks to me like that's really the trend that is more so in place at this stage, what Johnson & Johnson could actually be doing here is forming an A to B equals CD down. And the C point on this could have been the high of that shooting star, which would take it down to about the 82.92 level. Let me see here if I can see what it's trading at in the pre-market. See how it's holding up here with the Dow. So right now I show it trading down. It's trading out. Last trade fired off at 90.90 is where its last trade fired off of. So you've got a profit in this at this stage. So that's a beauty. And it's trading out at 90.90 right now. Can I ask, where's your stop?
My stop.
I would suggest at least move it to break even.
Okay, I was thinking about like 85 something, but you're right. I'm going to move it up. Yep.
Yeah, I mean, you've got a profit in it. And we need to say that it's been a nice, strong bounce that we've had in the marketplace. It's traded into a resistance area with lighter volume that says just be cautious. And there's no, I don't want to, it's just a quick analysis here that I've done for you, Sam, but I would at least move your stop to break even. Or take money, take profits. All righty?
Okay.
You bet. Have a great day. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow down 131, trading out at 15,242. S&P's off 7 at 1714. Composite down 16 points at 3822. Russell 2000 off 3.5 points. Trading out at 1088. Apple is flat. Microsoft down 9 ticks. Google off $5 and change. Cisco down 26 cents. Intel off 16. Leading the charge to the upside here. Nestle, NSRGY. That's up about $2.70, up 4%. American Express, I believe they were out with numbers. AXP, that is up 3% here this morning, up $2 and change. Solar City up 5%, up $2.50. A bunch of gold stocks, obviously. We'll come back. We'll take a look at gold. SanDisk out with nice numbers here. That's up $2 and change. It's up 3%. Leading the charge to the downside, IBM trading down $12 right now. That's going to be key for us to be watching here today. Trading out at 174. Select Comfort Systems or Select Comfort Corp, SCSS, down 25%. Boy, that's taking it in the shorts. That's off $6. Google down $6. Goldman Sachs out with numbers. They're trading down 3%, off $5 and change. Overstock.com, apparently too much stock. It's trading down 13% this morning, off about $4. Amazon down $2.50. United Health Group, UNH, off 4% this morning. eBay off about 5%. That's down $3. PetSmart down 3.5%. No shortage of things for us to take a look at. Now, what I want to do is I want to go back to Sam's call. I wanted to give him just a little bit more information. I knew we were coming into the open here. So, Sam, I still have the Johnson & Johnson on my screen, trading at 91.35. And what I didn't ask you was the time frame that you were really trading this on. So here's what my recommendation is from a stop standpoint. You know, let the market go ahead and take you out and put a trailing stop. Now, the average true range on Johnson & Johnson over the last 10 days has been $1.17. So that is just the normal breathing room that you should see inside of this equity. You can use yesterday's close and then back off $1.17. I just had thrown in a price of about $91. And if you use $91 as a number, if you took $1.17 off, I believe you're at about $89.83. That would be the tightest stop that I would recommend that you put on a winning trade. You could take a 1.272 expansion of that. That would set your stop right around the 89.51 level. And then if you wanted to take a wider stop than that, the 1.618 level, you'd look at about 89.11. That way, you're protecting your profits for the day. You're also letting it run to see if it can get over those resistance areas that we took a look at. If it can clear those resistance areas, then I can see it moving up into the $94 area, the swing point high from August the 2nd out there. So let the market take you out. Manage it by taking a look at the average true range on a daily basis, and then just let the market do what it's going to do. Because if I had asked you the question and said, you said, well, this is really a long-term trade for me, you have to be aware of that potential A to B equals CD down. Long-term on the weekly chart out here, this is nothing in nothing more than a nice, strong uptrend here. When it backed off down here on the trading session of October the 11th, came back with about 39 million shares. The prior swing point, that had 38 million shares the week of August 30th. So that doesn't look too bad out here. So, again, I didn't ask you about the time frame, which is really the most important question for me or anybody to ask themselves. What's the time frame it is that you're taking the trade or your investment in? In this case here, I failed to do that. So my apology for that. But that's how I would go ahead and take a look at Johnson & Johnson. Now, let's go take a look at some of the other movers out here in the marketplace. Let's go take a look at some of these earnings areas here. Let's go take a look at IBM, because this is going to be key for us to be watching here. In the case of IBM, it sure looked like it was going to hold support. We're going to take a look at the weekly chart out here. Of course, the week comes to an end tomorrow. Now, the weekly breakout, we've been taking a look at a daily breakout inside of IBM, and the key level for it to actually hold is going to be the swing from January 13th, 2012. It doesn't really show it necessarily here. If I put the volume on, maybe it does help a bit. I don't even know if it will show that volume breakout here on this chart. Nah, it's not really showing what I want. So I'm going to just take the volume off of this for the moment on the weekly chart here, just widen this up. So the real key area, because it's where we were dealing with a consolidation zone, is going to be the price level of 177.35. That's as much room as one can give it. It's traded at 174.40. Look, if it can hold 177.35, it will have at least held the consolidation zone. That's inside IBM, and that's going to be really important to be paying attention to. Volume-wise, back there, let's just go take a look at the daily chart. Well, I'll switch to the daily chart momentarily. You can see here, IBM, here it broke a rising price channel going back to 2009. That price channel held up until November of 2012. We saw IBM travel below it. And what it was doing here is just testing, trying to get back inside it. It did so with some nice wide price spread on January 25th, came back, tested it, went ahead, moved higher, made a 100% move, a little bit of a triple top out here. That kind of marks off the top of the consolidation level. I'll go ahead and put a line across the screen so that we can take a look at that area out here, that inside IBM. And then finally it broke loose with wide price spread. That was on April the 19th. So now we're taking a look at an A to B equals CD down, or several of them inside this. But the key really to be watching is not so much the A to B equals CD down patterns. What's key to be watching inside of IBM is whether or not it's going to at least hold this consolidation level. Again, the numbers there, 177.35. Right now it's trading out at 174.51. Let's switch to the daily chart, though. Let's see what kind of volume has come out of the equity so far here on this gap down. And it's pretty big volume. Already 4 million shares. We've only been trading for 10 minutes time frame out here. So this is not looking bullish for IBM. The mere fact that it broke through the downside of this descending price channel doesn't mean a whole lot, because price was already moving to the downside out here. So IBM's going to be key coming into the close tomorrow. Let's go take a look at some of these other equities that are moving specifically. Let's go take a look at Goldman Sachs, see what it is done. It traded, it gapped down this morning. It has covered that gap. It opened up at 155.99. It's trading out at 158.92 right now. What we can see here is Goldman Sachs has been trading in a 20-point trading range. The bottom of that trading range, we'd use the swing point of July 3rd. Down there, that's right around the 149 level, the top of the trading range. You know, the highs that were put in August 5th, or the highs that were put in on September 19th, out at about that 170-ish mark. How about that on September 19th. It made one of Basil's round number highs out there at 170. So just trading in a sideways consolidation zone, for it to pull back to the 149 level would be nothing but normal. Of course, a 200-day exponential moving average, that's at a price point of 151.34 as we speak here right now. So that is that's on Goldman Sachs. That's a trading range that it is traveling within. We had Xilinx out with numbers. That is trying to take on a swing point out here. Let's go see what kind of volume. The swing point, most recent swing point. This has been a very nice-looking stock chart. Today, so far, volume to the downside, 1.4 million shares in the first 12 minutes of trading out here. The swing point that it's going to try to tackle is August 27th. That's got 3.6 million shares. So it's moving down there with conviction. If it takes out that swing point, that'll probably be the first time I can see on this chart here where Xilinx, took out a swing point here back on the trading session of April 19th. It was 2.2 million shares, taking out 4.5 million shares. So that was a false break. Not enough volume to bust that one to the downside. Today could be a different story. Now, it's not at the swing point level, but you want to be watching 43.04 out there. If it can't bust it down, that would be bullish, although we got a bit too much volume here. But, it does have a high volume breakout, wide price spread, accelerated volume. That's really where where price moved back to on that August 27th date. We saw a breakout of this July 18th with 11 million shares, pulled right back to the breakout area, and it did that with 3.6 million shares. So it was came back to the breakout area. In fact, what you really like to see, which this one did show, was the breakout session from July 17th, the candle prior. That had 3.9 million shares, and as this equity pulled back, it did it with 3.6 million shares, 1.6 million shares. So it was coming right back into a breakout area. Went ahead, looks like it made a bit of an expansion. That doesn't look like it made the full 1.272 expansion, but let's go measure it. Pretty close to it. The actual 1.272 expansion of that set of swing points is 48.31. It actually got up to 48.12, so not too shabby there. That is on Xilinx out here. Let's see if I've got eBay up. If I don't, we'll go ahead and put it up here on the screen. There we go. We got eBay gapping down this morning. Let's go see what it is going after. Its most recent swing point. It took out a swing point here this morning. That swing point was from October the 9th. The low of which is $52.10. 9 million shares on that swing point. So far this morning, it's had 6.7 million shares come out of it. Let me get rid of the moving averages out here for a moment. Let's take a look at the sideways action that we have seen. So this is in a consolidation zone. If we take a look at that consolidation, it takes us all the way back. Give me a moment here to put the chart on this. Takes us all. Here's a consolidation with inside eBay. Let's try to measure it. We'd say it's from a low of about $52 up to a high of 57. So you've got a nice 5-point consolidation. Let me just mark that on my screen here so I don't have to do that math again. 5-point consolidation here. Trading range. I'm just spelling, and you can see just how quickly I'm able to type out there. We'll just change that to a nice little blue there. So we got the 5-point consolidation range. It's heading down towards the bottom of it. The bottom of it is the swing point that it's going after, which is from August 30th. As I said, 11 million shares down there. That low is 49.62. It is trading just outside that swing point right now, but coming down there with volume. I would expect the bottom of that trading range to be tested. That could set up a nice buy. If you can see it come down there and test that area with less than 11 million shares. Let's see, another time when it was down there, it had 14 million shares. And then the time before that, 7 million shares. The breakout was on 18 million shares. So looks like a nice sideways consolidation range. Of course, if it breaks that consolidation, then you've got 5 points to the downside inside of eBay out there. Otherwise, a nice trading range. Let's take a look at some of these other ones here that were moving out with numbers. SanDisk. Let's take a look at SanDisk. We take a look at the sideways consolidation zones. This one has it for sure. This one is a nice one because this is a 21-point consolidation, taking us back into the highs of January in 2011. They're up in the $53, $54 area. The low of the consolidation back in August of 2011 down at the 32.45-ish range. Well, it broke the consolidation, came back in, tested it, broke back out, came back and tested it one more time here on July 30th. Well, tested it, one additional time, and that was back in August 27th out here. This has a 21-point move. If you add 21 points to about 56, that would take us to, 77? So 77 is its price objective out here as far as where it wants to move to. I'll just put that down there. Now that's the minimum objective. When you break a consolidation, your move is going to be equal to or greater. What it's also doing here this morning is taking out the most recent swing point high, which at this stage here is the high from July 22nd, 63.97. It's up, and that's got volume of 5 million shares. Well, it's up there today with 3 million shares in 17 minutes of trading. So it is taking that out. That sets up an A to B equals CD, a confirmed A to B equals CD. We take a look at that pattern here. Well, it's going to already be up there. That's the 1-to-1, but the 1-to-1.272 takes you to 69. I really believe that 77 is more likely the objective here, and that is on SanDisk. So that is looking pretty darn nice out there. What else do we have moving? Well, we have Goldilocks moving, right? Let's go take a look at gold and silver. You got gold up $32 and change. So let's go through the commodity sector out here. As we take a look at gold, does look like the lows are in. It is up above. It needs to just simply close above that October 11th high out here, which is 1294.80 to confirm a nice buy pattern. So the 1.618 Gartley buy pattern, looks like that's in effect. So what is it that we can expect here for Goldilocks? Well, a couple of things. Number one, we've got a rising price channel that it broke out of, came back and tested it, and it held. So that's the first area where I would expect gold to move up to. We take a look at just simply retracements from the high to the low. We'll take a look at a couple different potential patterns out here. We'll see that the 0.618, the 0.786 retracements on gold here would which are 1364 and 1394 respectively, quite frankly, wouldn't be enough to take you up into the top of that rising price channel. And if it gets above the 0.786 retracement level, what that says is that it would want to do a 100% move of a move. Of course, if it's doing that, it gets back into the rising price channel. So those are a couple of different objectives. And if we take a look at the potential, what the ultimate outcome of any Gartley buy or sell pattern is that it turns into a new A to B equals CD. So if this turns into an A to B equals CD up, we're going to go ahead and, I got to grab the right tool here. We're going to go ahead and mark that on my screen right now. We're going to use the low, June 28th, 1179.40. We're going to use the high, the most recent high out here. That looks like that came in on August 28th, out at 1434, down to that C point from October 15th. As we move this thing shorter, a 1-to-1 A to B equals CD, that takes you to about the $15.06 range. And 1-to-1.272 would be $15.75. If gold gets back inside that rising price channel, that's probably where it's headed. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest. And Hertz Global has a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 101 right now. S&P is down 5. Let's come back to where we began the show. We were looking at the 30-minute charts. Let's do an update here. Hammers abound, so which is very cool. If we take a look here at the ES Mini, again, that was the strongest of the 4 out here. And the hammer candle so far, thus far, has held, which is the hammer candle that came in at 4:30 this morning. That low, 1706. We can see right now that price is on the 30-minute chart here. And we've got 6 minutes to go here, trying to get back inside that rising price channel. The C point here of the A to B equals CD down just simply needs to be adjusted a tad. But everything's still in place here as we speak at the moment. A break of the channel line, the ES Mini coming back up and testing that. That's what it's doing here right now. That hammer candle has held that low 1706.25. That's going to be key to be paying attention to. As we take a look here at the Dow futures, as they pushed down here, big hammer candle at the 9:30 session. So the bulls trying to run in here and protect that level. That says 15,137 is the area to watch. Again, the Dow has done all of its work that it needed to after it broke that rising price channel. The key here, area to be watching, again, 15,137 on the Dow futures. If we take a look at the NASDAQ out here, NASDAQ, no real hammer candles or anything like that so far, just a sideways move as we speak here. The Russell 2000, though, the Russell 2000 has put in 2 hammer candles, so the areas to be watching. The first hammer came in at 4:30 this morning. That's at 1083.20. the second hammer, and you got a nice big bullish engulfing candle here during this half-hour section. 1082.80 is the low of that hammer candle at 9:30. That's what you want to be watching for in the marketplace. We take a look at other things. You've got the VIX index. That has backed off as we take a look at it. That is below the 50-day exponential moving average. So everything is in place for a nice, good, old rally here. Now that everything is behind us, Washington, D.C. and so forth, we can just come back to earnings. We can come back to just traditional technical analysis. When the VIX is below the 50-day exponential moving average, a lot of buying pressure in the marketplace. We've got the, let me take a quick peek here at the New York Stock Exchange, see how it is behaving here this morning. The NYSE, that's up 2 points. That's up 3 points. Boy, that's big. With the Dow, S&P, NASDAQ, and Russell 2000, NASDAQ 100 down. You've got the New York Stock Exchange up. Net declining issues, only 131 out there. I don't recall the number off the top of my head, 900. But what I can tell you is that the bulls they are in charge of the markets. They've got every opportunity to see what it is, or will see what it is that they can actually do with it. But with the summation index is pointing up, it's actually very positive, not bearish, to see the New York Stock Exchange trading the way that it is at the moment here, the wider breadth of the marketplace. What else do we have going? Well, King Dollar, we didn't. We'll talk about. I'll put up the chart up here, and then we'll talk about it in more detail during the next hour. If we take a look at the U.S. dollar index, it's moving lower. It's staying within its declining price channel. It, too, had broken a rising price channel. This is a daily chart that we're looking at. It's got an A to B equals CD down that it wants to complete 78.64. That should put some energy into Goldilocks and silver out there. The euro U.S. dollar, that is in a very strong uptrend here. Part of that proof, take a look at this small sideways consolidation box that it had been traveling in. It has broken through that with wide price spread here today, coming into a resistance area, the B point of a larger A to B equals CD up, and it's doing that with some wide price spread. A lot of time left in the trading session here, but the euro pointing to higher price, substantial. Well, the first target zone for the euro is going to be about 1.3800. I believe that it wants to head even higher than that. We take a look at the weekly charts and so forth. So, folks, if you're off to start your Tom Terrific Thursday, nice call there, Tommy, on gold. Have a great day. If not, I'll see you in just a few minutes. Take care, folks. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.